WMFD.com. It is Coffee Talk with Jay Fox, broadcasting via Zoom today. And we are talking about social impact investing. Our guests today are Scott Hackenburg, who is a graduate of Hawkins School, a institution that is near and dear to my heart, and also the former founder of Swander Pace Capital with a lifelong passion for education and securing financing for schools. And Brett Jones, who's the Executive Vice President of the Evergreen Business Service Team. And Brett is a Fulbright Fellow who graduated from my alma mater, The Ohio State University, and also an MBA from DeVry, OHIO, indeed, indeed, indeed. And welcome to the show, as it were. How are you both today?
Good. Doing good, Jay.
So when we talk about social impact investing, we're talking about a scenario where an investor receives a financial return alongside a measurable social impact. What specifically was the impetus of this idea? Because while we are a kinder, gentler society, sometimes in the world of finance, the multi-letter word profit tends to be the motivating factor. How did this come about?
Scott, tackle it first.
Sure. I'll say, in terms of the term social impact investing, it's not an activity necessarily that began in 2009, but it is a term that was coined in 2009 when philanthropists from the Rockefeller Foundation and some others got together to talk about a new way of providing financing to what I'll call social enterprises. These are organizations that are doing good for society. Something different than just grant capital, and something that is different than just, Milton Friedman investing for maximum shareholder value. Of there being something in between where, as an investor, you can invest and receive your money back plus a financial return. At the same time, you are doing measurable good, and that measurable good can come in the form of workforce development, housing for homeless, or it can be services for development disabled adults. It can be a social enterprise that has a product which is doing something that is environmentally beneficial. It's becoming a real and growing asset class in the public markets. You hear a lot of ESG, which is environmental, social, and governance. It's the largest growing asset class in the public equity and debt markets, and in the private capital markets, which is the sector that Brett and I are focused on, private equity and private debt. It's also a burgeoning asset class where people are understanding that they can not just invest and look to generate the highest return or make a grant, but they can do both. You can do well by doing good, and we're focused on that. And it's something that I worked on the West Coast, and coming back to Cleveland, Brett and I teamed up because he's been with one of the leading really social enterprises and social impact firms in Cleveland. And so we've been talking about trying to map and make some sense out of the ecosystem here in Cleveland and celebrate what's going well and celebrate some of the social enterprises that are doing great things in the Cleveland region.
Where's the inherent need? Is it neighborhood redevelopment? Is it workforce? How do we identify the cart and the horse in this scenario?
I think that's a really good question, and it really depends upon who you're asking, right? Everybody is focused on different impact areas, and the cart and the horse will certainly be determined by their focus areas. We believe firmly that for us it's economics first, and then all the other impact areas. Can you guys hear me okay? Because that thing is
yeah, I can hear you.
Yeah. So I think it depends upon who you ask, Jay. And really what that ends up looking like is based upon, their priorities. For us at Evergreen, the focus is on economic justice. And so, our first impact is on people's wallets and on their pocketbooks and making sure that they have what they need to exist. And then, that sets the stage for other impact areas to begin to take hold.
Is there a working example, a model from a neighborhood where there has been a pattern of redevelopment and how it went successfully that you draw upon?
Yeah, from our experience, we're part of a consortium called the Greater University Circle Initiative.
Mm-hmm.
And everybody tends to focus on their siloed areas. We're not saying that we need to be first or we need to be last. We just need to be, right? And I love the fact that there are other folks focused on other parts of social justice and that we come together to sort of make it all happen at once.
I guess what I was asking, and I was specifically, what came to mind for me was the Lee Harvard redevelopment area. And it seemed to be a multi-pronged situation. So while new houses were being constructed and at the same time new shopping centers were being constructed, things were being redeveloped in that area. And as a result, you had both opportunities for employment, opportunities for housing, and opportunities to recycle the dollars from that subsegment of the community into that subsegment of the community. Is that the goal of what you're trying to do?
Again, I hear that's very scientific, and I'm not an economic development guy in totality, or an economist, if you will. We just tend to focus on our portion of it. And I think it's a really good question, and certainly would love to pay attention to your other guests to hear what they think about that. But Scott, what do you think? What needs to come first?
Well, I think, in looking at Cleveland, real estate development is really, I think, the one that is caught the headlines and has really taken the lead. There's been a lot in the area of neighborhood and economic development and multi-use development, and a lot of capital has been allocated in that area. Where Brett is focused on is not so much in real estate development. What we're talking about is really more on workforce development and economic development by creating and retaining good jobs, and having companies and small businesses in neighborhoods be supported, because it's important for those neighborhoods. It's important for those employees to be able to retain and grow the workforce. And so that's an area that Evergreen is very much focused on, and that Brett and I are talking about. And it's a broad spectrum when you look at economic development, Jay. And real estate is a component. There's a lot of people in Cleveland that are focused in that, have been focusing in that. But we are looking where the needs are and where there might be some gaps. And if you look at statistically, Cleveland is the poorest big city in the United States, and workforce development is obviously a huge component and an important force in helping the community. And so that's an area that we're focusing on.
So one of the things, Brett, that you bring to the table is a concept of helping retiring business owners sell their businesses to their employees. To what degree does this fit into the social impact investing concept, or is it not part of it at all?
I think it squarely fits in there, Jay. And so when you talk about the redevelopment efforts, right, and I think everybody's trying to figure out how to circulate more dollars and give folks a greater stake in the economic outcome. And so our tool, if you will, specifically is around employee ownership. And if you think about all the businesses in those strip malls and that operate in those neighborhoods, that those residents patronize, if those are employee owned, those dollars circulate. And so, initially we're focused on, partnering our employee owned organizations with anchor institutions. And, we've shifted based upon, what's been called the silver tsunami, to really anchoring the jobs through employee ownership. And so we absolutely view our investments as impact investments, because of their outcomes, right? The greater stake and the profit sharing that folks get to have But we also, view it as impact investment because we're able to offer a return to our investors that is, it's not market rate return, but it's, to Scott's point, it's not a grant. And so, we'd like to think that we're leading in this space as far as impact investing and providing returns to the investors, specifically around employee ownership. So I think it fits squarely, and it really begins to fuel everything else.
So when you talk about a competitive risk-adjusted financial return, how do you guarantee that investment?
You can't guarantee it. I mean, there's risk associated with the investment. And, I think you look at risk return, the higher the risk, the higher expected return, and the lower expected risk, the lower expected return. And you have to figure out where to play in that spectrum. And I think, what Evergreen is focusing on and what we're focused on is not looking to extract the maximum amount of financial return, but really try and mitigate risk as much as possible and increase the amount of measurable social impact. And we're impact first, return second, but returning capital plus interest is very important, because an integral part of impact investing, which makes it different than grant making, is that this is recycled capital. This is capital that comes back to you, the investor, and can continue to go back out and continue to make recurring impact over and over again. And so it's very important that we mitigate as much risk as possible, so that we can return capital, but we also make it, attractive from a returns basis. I mean, again, depending on where you are in that risk return profile, you can market an impact investment as a cash equivalent. Instead of having your money, Jay, in a bank or, a corporation or an individual or family office having their money earning no interest in a bank or in a treasury, for what we're looking at doing, it's actually a return that exceeds that. But it's doing good. And so, but we're not trying to, and would never try and compete with a standard venture capital or private equity model. They're looking to extract as much economic value as possible, because in doing so, you can't help but have to make decisions oftentimes which are good for the bottom line and not good for your employees and, social benefit in general.
So where is this investment coming from? Is this individuals? Is this companies? Is there the potential for grant funding to be tacked on to a social impact area? How does that work?
Yeah, I think they're coming from all of the above. At Evergreen, we were really fortunate to have our initial capital come from grant sources and/or forgivable loans. And what the expectation of that investor is that we're going to revolve those dollars, right? So we're not going to retire them ever, right? We're going to use the principal to make the investments, and we're going to use the interest to keep the lights on, and in the process really enrich and create wealth building opportunities for the workers. And so whether it's a family office or a foundation or an institutional investor, if they're focused on the triple bottom line, which is people, profit, and planet, then certainly we're a great vehicle for them to land their capital.
So how do you get started? Where would be the first project?
So we spend a lot of time on pipeline and looking for the right opportunities, right? We have a scorecard that we'll use to rate the impact, and all things being equal, we're gonna make the investment in the opportunity that really gives us the most impact. We're focused on people and not necessarily industry. And so really for us, it becomes a pipeline evaluation, exercise to determine where to make the first investment, but there's really no prescribed area as to where you would make that first investment.
So in terms of letting people know what you're doing, one of the things that you guys are considering embarking upon is doing something like a YouTube channel or a podcast. Why did you consider that rather than perhaps like a television infomercial or something like that?
I think that the purpose of the podcast is to have conversations with people in the Cleveland and Northeast Ohio community that are focusing on making an impact, and dollars are associated with the activities that they're involved in. And so we wanted to have conversations with people to have really a record of who's doing what. Since me moving back to Cleveland, Jay, I was focused in economic community development in Oakland and the rural Central Valley of California. Coming back to Cleveland, it's really been interesting. The ecosystem is very different, and it's hard to map. And so part of the purpose of the podcast is to help others map it out and know who's doing great things. Because one of the things I noticed about the Cleveland community is, there's a lot of impact investing going on that we just don't call it that. In the West Coast, we run around, we see how great we are. But in Cleveland, it's a lot more humility. And so it's just, we're trying to bring people to the table and create content around people that are doing great things that are having a significant impact in our region.
Is there a working model that, comes to mind immediately as a project that provided both a strong economic and community impact, but also provided the return on investment that you hope to procure for people? Do you have a working example?
Yeah, I mean, I think the Evergreen Cooperatives is a great example, and that's really again focused on economic justice and wealth building opportunities, and so we don't have to go very far to find something to point to. And to Scott's point, with it's disjointed, but it's also to his point. It's a lot of humility here, right? We have one of the oldest community foundations in the country. And so philanthropy and giving and supporting people and improving lives it's in the DNA of this town. And so we don't really do a lot of talking about impact investing or even classify our activity as such. But when you really start to unpack where we are and where we need to go, Scott and I quickly realized that, one, people needed to learn and people just needed to be able to talk, right? We're not necessarily pushing any products or any services or, any capabilities. We just want folks to be having the conversation, because we know once the conversations begin, people will start to connect the dots and, it'll be highlighted. And that's really our point here.
So when you endeavor to do your podcasts or your YouTube channel, who's going to be your first guest?
We've got a lot of people. Like I've got this whiteboard, and Brett knows everybody in Cleveland, and everybody knows Brett. I mean, I could probably just off the top of my head list 40 people that we would want. The question is, who would we want to sort of get first?
Right.
From the standpoint of we're going to suck, the first few times. And so that, we have to take that into account. But I don't know. I always think of Bill at Epic Pie, just because he's a good guy. Bill is was a MD at one of Cleveland's top investment banks and is well known in the community. And he has now got an organization that he provides financial advisory services to all social enterprises that are doing good. And he actually kind of brought Brett and I together, and he lives in Ohio City, and it's a really cool place. And he's like sort of a guy that everybody comes to see Bill.
So Bill's the guy.
Maybe. Just one thought.
Could be.
I agree, right? Bill's helping to keep the whole ecosystem patched together as it is today. And so, if we could start the conversation with Bill, I think that'd be an amazing starting point.
And wouldn't you agree that networking is crucial to the success of this endeavor? Because I think about your connections in Cleveland, Scott's connections in the financial world, the connections to the Ohio State University and its alumni database, even the connections to Hawkins School, which is perhaps the most well-endowed private school in the country. All of these are cadres of people who believe not only in the concept, but also have the financial means with which to participate. So would you agree that networking is going to be an essential part of the success of this endeavor?
Yeah, I agree 100%. It's a relationship. This is, finance tends to be a relationship-based business. And, between Scott and I think we've got a pretty solid network and probably just 1 or 2 degrees of separation from most people in the country. So yeah, it's relationships, more relationships and more relationships. And, hanging out with guys like you, Jay, that's our goal.
Well, you've just elevated me to the top of a ladder that I'm not sure I even belong on.
Hey, Jay, don't be saying that, because OSHA may be listening, and then you on ladders when you shouldn't be is scary.
You never know. You never know. What's the potential downside for this project? Is there any downside?
That it just doesn't get lift. I mean, when I look at a lot of, coming from California, but looking at even Kansas City or Columbus or other cities, there is a pretty strong ecosystem in doing what Brett and I are talking about. And Cleveland just hasn't gotten there. I don't know the reasons why. I mean, but, I think part of our diligence has been talking to folks who have gone out and tried some things and have failed, quite frankly. And that's what I've been spending a lot of my time on, is what's worked and what hasn't. There is a laundry list of really well-intentioned bad ideas that were, either dead on arrival or just, were beaten to death and should have died before they even got there. So we don't want to make sure that we're not one of those. And so it's just really about, just doing diligence in terms of the receptivity of the market and who might be interested, and just the fact that there's a need and it's not being addressed, and it's an opportunity to educate, might sound condescending, but just to bring this forth to the Cleveland, greater Cleveland community.
Well, the endeavor is focused on social impact investing, and the concept is investors receive a financial return along with a measurable social impact that impacts both economic and community development for a neighborhood, a region, perhaps even helping to redistrict or remap a social finance ecosystem for an entire region. And it's a beta test concept that obviously, if it has legs in one place, it will have legs in other places across the county, the state, the country in general. Our guests today have been Scott Hackenburg and Brett Jones, and we want to thank you for watching Coffee Talk. Coffee Talk is a service of WMFD Television, sponsored by the Cove Coffee Shop and Pizza Company in downtown Ontario, Ohio. And you can watch this on WMFD.com anytime, and also on our social media. I'm Jay Fox. Thanks so much for watching Coffee Talk. We'll see you next week.